Hello everyone, I want to make this video about part 2 of why I sold this home that I bought in 2009. Now, I'm not going to explain the context of why I sold because if you do want to learn why I sold, you could check out this video out here. In this video, I want to talk about the numbers. I want to reveal the math behind real estate investing. Now, I'm revealing this because I want to share, well, the realities, the good and the bad about real estate investing and share all the numbers. I also want to share how much time was involved and my strategies for decreasing taxes and saving a ton of money. In fact, a couple of these strategies saved me more than $100,000. So if you've ever wondered if real estate investing is the right path for you, or you're just curious about this whole journey, then you definitely want to watch today's video. If by sharing this information in this video helped you some way, shape, or form in your investing journey, then this video is entirely worth it. Now, to give you a brief context about this property, I bought this property, I call it my mushroom home, back in 2008, back when we were in the thick of the financial crisis. Now, this rental property has had its ups and downs. It has gone through the financial crisis, it has gone through the period where Ottawa was cutting back a lot of jobs, specifically in the government, called the DRAP at that time, or Workforce Adjustment Program. So let's just say this house had its fair share of experiencing the ups and downs of the housing market cycle in Ottawa. Now, I bought this property because I actually was priced out of two neighborhoods, okay? It was too expensive for me. So I chose this neighborhood and it was a bit on the rougher side. It was in transition. So this particular pocket was going through a lot of, I would say, if you walk down the street, you'll notice a lot of houses were going through updates, a bit of renovations, but then there's a lot of homes that are really, really old. Now, this home I bought was built in the 1920s, so it's a very old home. And it was only 2-bedroom and 1 bathroom, and it needed a lot of updating, but mostly cosmetic changes. Well, now what I love about this home was transit was like literally across the street. There's this very popular dog park that was very close by in Experimental Farm. There was a major hospital within 1 kilometer. So looking at it, it was a pretty good location and it was pretty close to downtown. So as promised, let's reveal the math. So let's math it up. So I bought this home back in 2008 and I bought it for $226,000. Fast forward to 2022, I sold the property at $662,000. But there's more to the numbers. I put in a 5% down payment because I moved into the home. It was equivalent to about, just rounding it up, about $12,000. I also put in $20,000 worth of renovations because my husband and I, well, we lived in the home for more than a year and we put in a lot of work. It was pretty much a part-time job for the first 8 months because we didn't have a lot of cash. So we did the renos ourselves. Now, over the years, owning it between 2008 to 2022, we had expenses about $26,000 in total over a 14-year period. Now, our mortgage balance over the years, which is being paid down by the tenants, shrank down to $113,000. So that was what was left over a 14-year period. Now, when we sold the home, we had legal fees, which amounted to $1,700. So in terms of how much we made in total, we put in all the down payment, the expenses, the legal fees, and all that was equal to $64,700 over a 14-year period. Now, in terms of how much we made, accounting for taxes, which I calculated about $75,000 worth of taxes. Now, I'll give you a brief rule of thumb of what I did to calculate $75,000, just in case you're interested in. But in total, we made $414,000. And then when you divide that by how much we put in, that equals to 640%. 640% over a 14-year period, which, if you just divide by 14 years, that's equivalent to about 45 to 46% a year. Now that sounds pretty good, right? But I did say there was $26,000 worth of expenses over a 14-year period. I want to show you the realities of owning a rental property and how the expenses added up for me so that you can get a sense of what to expect if you are planning to own a rental property or you're a real estate investor right now holding multiple rental properties, what your journey could look like. The first few years, the expenses range from $300 to $500 for a few years. Then in 2018, it started rising, okay? It jumped up to $1,600. Then in 2019, it jumped up to $5,600. Then in 2020, it dropped back down. But the biggest expense was in 2021, where I spent $14,000 on the property. So why is that? Why is these expenses so lumpy? Well, let me just give you kind of a brief, quick, concise summary of all the expenses, what type of expenses I had for this property. So I had 2 tree repairs. And if you know anything about trees, trimming, crowning, cutting is very expensive. So I had 2 of those. I had a furnace breakdown, which I had to replace a part. I also had to paint the house twice, the entire house, which can be quite costly. I also had to fix the porch. So I got contractors to fix the porch. So all in all, and I think, did I mention the roof? Okay, the roof needed to be replaced. So all in all, over a 14-year period, it was $26,000. And the biggest expense was in 2021 when I spent $14,000. So just to give you a bit of realities about real estate investing, yeah, it's so great in paper where you put in down payment, you collect cash flow, you collect rent from your tenant, which is going to pay down your mortgage. But year over year, there's expenses. And sometimes it costs quite a bit of money, like the roof, which costs about $11,000. So I would say that to own rental properties takes money, and you need to be very careful and have a reserve fund of at least 3 months of expenses set aside. And when you get big expenses like a roof, well, make sure that you have a HELOC set up against your property so that hopefully your property is building equity, and then whenever you have a big expense, you can use that HELOC to actually pay for some big expenses like a roof, so that you don't have to come up with all that cash. So what I can say is that not every year is a positive cash flowing year. As you can see, 2021 was a big negative, minus $14,000. So that's realities of real estate investing. Sometimes it cash flows, and some years it just doesn't cash flow. Now, as promised, I wanted to share how I calculated my taxes. I am estimated about $75,000 worth of taxes. So how I did that was I took the selling price, which was $662,000, and I took what was appraised once I moved out of the home, and that difference is my capital gains. But remember, only 50% of that is capital gains. So rather than doing all the 50% and then taking whatever the marginal tax rate based on the capital gains, I just did, hey, I assumed because I'm going to be making a big chunk of money, I'm going to be taxed at the highest tax bracket. So the difference between what I sold the home for and what I got appraised when I moved out, the difference is I took 25%. So 25% of what the profit is what I'm calculating is my taxes, which amounts to about $75,000. So you're probably wondering, how much time did we spend on the property? That's a great question. So let's dive into that right now. So in total, remember I said that we did spend a majority of the time living in that home. We renovated the property. We tore down the wall, we updated the kitchen, we blinged up the porch, we painted the property, we did landscaping. So all that is about 8 months of work, 20 hours a week for 8 months between the 2 people. So that is about 1,280 hours. Over a 14-year period, we spent between a day to 3 days worth of work over a 14-year period, which approximates to 192 hours. So grand total, we spent 1,472 hours on the property over a 14-year period. So that might seem a lot of hours, which it is. In reality, that's a lot of hours, but we actually did front end load the hours where we did put in the time to do the renovation. Now, of course, we could have contracted all that work out, but because we were, well, freshly new graduates, not a lot of money. We were trying to scale a rental property portfolio. We didn't have a lot of money, so we put in sweat equity. Now, as promised, I wanted to reveal how I saved over $100,000 in taxes and fees. And I think these strategies might be something that's super interesting to you, especially if you are in the future looking to sell a home or looking to sell a rental property. This may save you a ton of money. So the first strategy is get your house appraised before you move out. So if you are living in a home that you're planning to, well, convert into a rental property in the near future, please get an appraisal before you move out, because when you get an appraisal in Canada, if you live in your principal place of residence, you don't pay any capital gains when you sell it. Well, the same thing applies if you convert it to a rental property, but you have to get the house appraised before you move out, because then you can lock in that value like as if you lived in that home, and all that value is tax-free. So I was able to get an appraisal before I moved out, and I locked a higher value because, well, I blinged up the property, I forced appreciated, made some cosmetic changes, and forced appreciate the property. Now, the second strategy is something you can easily do. We all have RSPs, okay? And hopefully some of you have a lot of RSP room. And so when you have a rental property that you're planning to sell, you can hoard a lot of your RSP contribution room by not contributing a lot over the years for that big win, the big win where you are going to have a big capital gain. Well, you have a lot of RSP rooms. So you can take some of the profits from the sale of a home, dump into your RSP to reduce your taxes big time. Here's a third strategy. If you're planning to sell and you really like your tenant and your tenant loves your home, you can actually ask the tenant if they would like to buy the property. Not only would you likely avoid an inspection, which is like saving a few $100s, but you can easily wipe out the realtor fees because it's a private sale. And that's exactly what happened when I sold this property. My tenant bought this property. She loved the home. So we avoided realtor fees, we avoided an inspection, and so that saved me a ton of money. So with those three strategies, I saved over $100,000 in taxes and in fees. So when you do a private sale, you just have to write up a purchase and sale agreement, have the lawyers check it out, but you just remove the middleman, which is the realtors, which would save you a ton of moolah. Anyways, I hope you found this video super helpful in revealing math and learning strategies of how to save you a ton of money. And we'll see if this real estate investing path is really for you. If you want to learn more why I sold this rental property, you can check out this video up here. If you want to get into real estate investing, check out this playlist up here. Anyways, I hope to see you in the next video. Bye!